This the story of crypto blood and truth blitz. Ask them a cliff high what the truth is. They was just talking about the blockchain. That's when they heard Janet yelling and the cops came. They said give me all your Bitcoin and lock aim. Then Jamie Dimon showed up and the shots rained. So they hopped in a Lambo and took off fast. Welcome to the Block Party Podcast.
What's up, people? It's the Block Party Podcast, episode number 4. It's your boy Crypto Blood
and Truth Blitz. Today we're going to be talking with the one and only Jim Willie.
That's right.
About a couple of different topics, talking about cryptos and is the mainstreaming of crypto signaling the end of the dollar. We're going to talk about the Bitcoin futures contracts and are they being manipulated, and a bunch more. So make sure you guys tune in.
Part 1. Here we go. And ladies and gentlemen, we finally have the great Jim Willie, editor of the Hat Trick Letter. Jim Willie, thanks for joining us today.
Good. You can find the Hat Trick Letter on www.goldenjackass.com. We've been in business here with the newsletter for just about 14 years now. It's been a long ride. It's been a lot of fun. It's been some frustration, but got a lot of big forecasts coming correct, and in the past, many have come to correct. And I like to boast and say that I've got a forecast record of approximately 85% correct, maybe 90.
Yeah.
Whereas Wall Street economists boast at 20 and 25 or 30%, but they're not paid to be correct. They're paid to defend the dollar system.
That's right. That's right. So you're going to be actually making some changes to the newsletter a little bit, aren't you?
Well, I don't know what you're referring to. I made a change this past month to make it a single report for the month. But
Okay.
there are other things. I for instance, I think you're referring to the fact that I can now accept cryptocurrency as payment.
Nice.
I don't prefer it. That's why I don't, openly talk about it in a positive way.
Right.
I do it as a secondary source of payment when the main source, the scheduled payments through credit cards, is not available to somebody.
I hear you, and that's a good reason to use it. We were talking, ladies and gentlemen, before we started to Jim, and I was just telling him it's good. I don't know. I think this may be his first interview with a crypto channel, and we need people like Jim in this space to bring his commentary. He has knowledge in economics, statistics. He has a doctorate in statistics. He's very knowledgeable and has a great team that helps him as well. People like Robbie Kirby. It's great to have him on this channel to definitely pick his brain and really ask this smart guy about some topics regarding cryptos. So to not drag it along too much here, let's go ahead and get into the first topic, and that is the end of the dollar initiated by cryptos. What is your thoughts about that, Jim? Is this possibly a bridge to kind of transition us into the new paradigm?
Okay, well, you said the end of the dollar initiated by cryptos. I would not characterize it that way at all.
Okay, all right.
I would say we have the end of the dollar, which is simultaneous with the introduction of the cryptos. Okay,
that makes sense.
Cryptos are not killing the dollar. I don't see that at all. Cryptos are simultaneously in the room when the dollar is facing intensive care ward for, how shall I say, a generation of fraudulent currency, 15 years of profound multi-trillion-dollar bond fraud, and in the last several years, very evident that the dollar is suffering from a global defense by military means. Okay, those have prompted, and it really got kicked off in a major way with the Ukraine war.
Okay.
Ukraine war was to try to to, in the same theme of George Orwell, Oceania versus Eurasia, trying to block Eurasian trade zone unity. The U.S. and Brussels tried to obstruct Gazprom and Russian gas supply from becoming too important to Western Europe in energy provision. The United States had what they thought was a better idea, but it's just so crippled and moronic, it's beyond description. It's so funny. We want Europe to buy our natural gas and LNG at twice the price. Yeah, that makes sense. Yeah, that makes sense for Europe. They'll love that. So, the United States blocked and created a scorched earth in Ukraine, and that's not going over well because Russia is smart enough to have the Turkish stream go south of that. So there are workarounds to the U.S. obstruction there. And then you have the Syrian war and more military. I made seriously, Jerry, I made a forecast in 2005 that when we get to the late stages of the dollar and its generation of hegemony, it will be defended by military means.
Absolutely.
And many people didn't know what I meant by that until we started to see things like the Ukraine war and Syrian war, and there's more. But okay, the timeliness for the arrival of cryptocurrencies, in my opinion, coincides beautifully with the late stages of quantitative easing, QE, executed by the Federal Reserve. I call it the U.S. Fed. It's on U.S. soil. It manages U.S. dollars, therefore I call it the U.S. Fed. But it's really the Federal Reserve that's really, multinational, supranational, above any national boundary. But I call it the U.S. Fed. So they started QE in 2012. By the way, in 2011, I forecasted that they would do QE because they were running out of bond investors to finance the U.S. government debt. So we needed some emergency methods and measures to compensate. I also said that once QE got put on, unlike what Bernanke was saying, it would not be 6 to 10 months. It would be permanent.
Perpetual.
And that turned out to be correct, too. Back in 2008, when Lehman croaked, they didn't just die. They were suffocated. J.P. Morgan and Goldman Sachs bought a couple $1 billion worth of their mortgage bonds and never paid for them. And that basically suffocated Lehman, and they died, and they called it a financial failure when it was a murder. It was a corporate murder.
Yeah.
Murder like a plastic bag put over Lehman Brothers' head. Okay, when they came out, when that death happened, by whatever means, I made a forecast they were going to go to 0%. When they got to 0% and made that historic move, I said, okay, this is going to be kind of like Japan, but on a global scale, and it will not be 6 to 10 months, as they say. It'll be permanent. Okay, that turned out to be correct, too. So here you have cryptos making their biggest gain, led by, the flagship Bitcoin.
Yeah.
And the gains for its valuation are monstrous in the last 2 years when QE and the unsterilized monetary inflation executed by the U.S. Fed has been just a nightmare. It is beyond heretical in its description. When I was a kid, I studied economics, but I like to boast and say that I don't have an advanced degree in economics. I'm unencumbered by the limitations of an economics degree and credentials.
Right.
I have a statistics degree. It's worth a hell of a lot more. I know PhD economists who are absolute effing morons. I've debated a couple of them. One was from Cornell, another one was from Harvard. And when we were done, I said, can I ask you a personal question? And they said, sure. I said, are you embarrassed by the fact that you don't know a fucking thing about economics? and it's a good way to close out the conversation.
Yeah.
Yeah.
Okay, so cryptos arrived when the QE policy. Now, I got to describe this. It's hypermonetary inflation because it's like in the trillions.
Yeah.
And they do not admit what they put into the system with respect to the derivatives. I believe the derivatives are at least a couple $1 trillion a month. Okay, that's hyper. Okay, it's monetary inflation because they're financing the U.S. government debt, and they're paying by the printing press anyone who wants to cash out of a treasury bond. So like China or Korea or some other nation, maybe even Japan, might cash out of some treasury bonds, and it doesn't go into the market forces. It just gets paid by printed money from the U.S. Treasury and the Fed, and that's that. Okay, the unsterilized part is very dangerous, and this is critical, I think, to why Bitcoin and other cryptos are rising in value and usage. Mm-hmm. Unsterilized means that when they inject, say, $100 billion in treasuries from in monetizing, for instance, a treasury issuance to cover and finance U.S. government debt, they're not removing at the same time, with the other hand, on a different table, $100 billion within the banking system. That's what they used to do. So sterilized injections do not have the consequence within the system. They would not be adding to the money supply willy-nilly. But we have, since 2012, unsterilized, unmatched withdrawals, and hyper volume in the trillions. They're lying through their teeth on the amount of money that they're injecting into Treasury bond market. They're lying unbelievably. I'll give you one example. Back in 2010, there was what we have been told to believe was a big Treasury bond rally. It wasn't a rally at all. Countries were dumping their Treasury bonds. But what we saw by means of the OCC report, Office Comptroller of the Currency, which is very rarely looked at by morons who run the finance analysis desks, OCC report showed that for 2 quarters, Morgan Stanley increased their derivatives, in particular the interest rate derivatives, by $8.5 trillion. Okay, that's $8.5 trillion worth of leverage in the Treasury bond market, which caused a rally even while countries were dumping it. There was no safe haven at all. All right, so this is the kind of atmosphere. Unsterilized, hypermonetary inflation. It's gone on for 5 years or more, 6 years now, I think, 6 full years. 12, 13, 14, 15, 16, 17. That's 6 full years. Never happened in history. And in the last 2 years, you have this sideline inventive adventure of electronic money coming to the fore with a basis of electronic work, which is a heck of a lot deeper a foundation than the dollar. And it's rising in value. So I think we have numerous reasons why the dollar is dying, and crypto is like a major thorn in the side.
So how do you feel they will be able to combat that? What tools, what strategies are they going to use to try to combat this new crypto world? Because a lot of capital is going to fly into this space. Is that not right?
Well, yeah, a lot of capital will fly into the space, but you're having a few different countries that are blocking the usage of crypto. I'm not. I just saw a story today. Was it Japan that just announced that they were going? No, India.
India. Yeah, they sure did. I saw that.
They're going
this morning.
They're going to put complete blockage on crypto usage. Well, China has put in some obstruction measures.
Yeah, it's their second failed attempt. Yeah, I was just saying that was China's second failed attempt at blocking cryptos. So I'm just wondering, from your perspective, do you think they'll even be successful at these attempts, though? Cryptocurrencies by nature.
That's where I was going to go.
Go ahead.
Yeah, Jerry, seriously. It's like saying, anal intercourse is not permitted anymore. But you got guys like Obama and Michelle, aka Michael LaVaughn Robinson. They might object and say, "Well, we love anal intercourse. What are you going to do about it? You're going to put a policeman in my bedroom?" That's the point. What are they going to do? Are they going to have internet police, a new brand of internet police that go around, surfing about, looking for transactions and say, all right, you're using this particular crypto token, and that's been banned. So now you've got a violation, and you're going to be fined, and it's going to cost you in Bitcoins, or we're going to block your Bitcoin account, or we're going to seize it, or we're going to, do whatever. Okay, how are they going to enforce this? I think what we're going to see is a parallel of interfering with cryptocurrency usage and transactions, much like the Russian sanctions for Western Europe.
Interesting.
So Germany and France are setting up new deals. I'll give you an example. Germany reacted to the sanctions from 2015 by setting up Russian subsidiaries for their German companies whose output in Russia from Russian labor was sold to Russian customers. Okay, that got around it. But now they're doing something much more in the face of the Americans in Brussels. The Brussels EU Commission is precisely a fascist dictatorship. So now they got Nord Stream 2, which is a pipeline in the Bering, not the Bering Sea. Oh, shoot. Baltic Sea. Bering is Alaska. Baltic Sea. It's underwater, connecting Russia for their second. There's a Nord Stream 1 that's in progress, in activity. It is being actively used, not inactive. And now they got a Nord Stream 2, and the United States came in and said, no, we're going to do sanctions against German firms. Are you kidding me? Against German firms that are involved in the construction or finance of Nord Stream 2. And the Germans said, F you, where do you get off? These are German companies. They're in German sovereign land, subject to our laws, and you have no position sanctioning us for activity on a project that we want. So the Germans just ignored them. Now, what's going to happen when, say, a Chinese group has extensive Bitcoin accounts and they try to use them within the exchanges mixed in with legitimate cryptos and other, I call them functional tokens? Can the Chinese government really get in the way and stop that? I don't see so. It's like Obama preferring anal intercourse. They can't stop it. I think it's going to be evident how incredibly, not inept, but without tools, without teeth, the governments are going to be. They're going to try to do things like say, well, you've got a capital gain on your crypto account, and you need to file that just like you do with your stock accounts. And, we've got the 1099 forms all linked in with your brokerage accounts. And we're going to need to get compliance with the Bitcoin and other crypto exchanges to report 1099 gains. And you know what's going to happen? The cryptos are just going to move locations.
Yep.
They're not going to be identifiable. They're not going to be able to discover where are they. They might be in Latvia 1 month. They might be in Rome the next, and Iceland the third. And
so now we also have Jim decentralized exchanges. So there is no one particular. It's not like a one custodial account where you go and trade your cryptos. It's all peer to peer. So those are starting to pop up as well. That's going to really cause a lot of issues for the federal or the government, the U.S. government, IRS and all of that to really track this stuff down.
Well, they hate the idea. The governments hate the idea of decentralized.
Exactly.
Whenever I get people coming to me and saying, oh, gosh, Jim, they're going to force everything into their crypto. And I said, oh, really? their crypto is going to be centralized and not transparent.
Mm-hmm.
So let's talk about that, Jim. The Fedcoin. Okay. There's been rumors, right, about this whole Federal Reserve cryptocurrency. I don't buy it. I know, but here's the thing though, because when I heard this, the first thing I thought of was actually you. I'm like, is this the Scheisse dollar that Jim was talking about, or what are your thoughts? What are your thoughts about this Fedcoin rumor? And how that would even play out?
You know, the funny thing about Fedcoin right now, you guys, is we don't know much about it.
Right.
What we do know...
Yeah, go ahead. Well, go ahead, Nick.
What do we know about it? It's a crypto. It will be managed by the Federal Reserve and their minion Wall Street banks. And they talk about concepts that seem to ring like centralized. And everything that we've seen in the last generation from this crowd has been the exact opposite of transparent. Now, will it become somehow a shade of the new Scheisse dollar? I don't think so. Okay, let's just think of, imagine one particular usage. You've got a shipment from India of a lot of clothes, and it takes up the bulk of a container vessel. In the rest of the container vessel, you've got a bunch of South Korean domestic electronics, televisions, radios, cameras, you name it, Samsung smartphones, you name it. Okay, so this ship, it's got Indian clothing and Korean electronics, and it's getting ready to, dock in Los Angeles. Do you really think they're going to be using a cryptocurrency called Fedcoin to pay for it?
Not at all.
Okay, I can't see that at all. I think where that is going to go, that example of the Indian and Korean shipment of container vessel, one container vessel, I think that is going to lead toward the gold trade note.
Okay.
And the gold trade note is going to be built on the back of the Shanghai Triangle, I call it. The RMB oil and gold triangle. So out of that will emerge the gold trade note. Now, the big question to me is, will some form of cryptocurrency be built or matched or tied at the belt with the gold trade note? That's the question. Fedcoin, I'm sorry, they're not even in the room.
So, Nick, you were going to make...
This design, let me just finish, rapid point. This designed crypto that could be tied at the hip with a gold trade note used for container vessels and oil shipments will be designed. The crypto will be designed in the East to sit atop the financial structure created by the East. The Fed and the West are not even in the room.
Interesting. So, Nick, you were saying that Mnuchin actually said that was not even on the table, huh? The Fedcoin?
Right. Yeah, he did say that. It wasn't that long ago that he said that.
Who said that?
Steve Mnuchin.
Oh, yeah.
Yeah. So he said there are absolutely no plans for that at this point, and because there's no need for it, is what his exact words are. So I don't know. I mean, is he being truthful? Maybe.
Are they ever truthful?
Right. That's the thing. No.
Well, still in the ports for the United States, this is really important. The New Jersey and New York ports, the Virginia ports, and the Los Angeles and Seattle ports, and the San Francisco ports. Do they still have the ability to use treasury bills to pay for the imports coming into the United States? Mnuchin is saying, yes. I'm saying that we're going to be approaching a time, and I think it's within this calendar year, where there will be spots where the shipments will not accept the dollar.
Yeah. So is that when we have that inverted yield curve that a lot of people are starting to talk about again?
Yeah.
That will happen sometime this year, later this year. Is that kind of your trigger point as well?
Oh, I think we have a number of trigger points right now, but I don't know that triggers the launch of a new dollar or the rejection of the current dollar.
Mm-hmm.
What it triggers is a crisis and a pretty clear signal of recession. Just imagine multi-trillion-dollar support for the Treasury bond, and they still can't get out of the recession.
Mm.
I maintain, guys, I'm serious about this. I study GDP and unemployment and price inflation. I study it regularly.
Mm-hmm.
We never got out of the recession of 2007.
Oh,
Mm-hmm.
yeah, I agree.
Yeah.
I agree.
Smoke and mirrors.
So when they say, oh, gosh, look at this, 3 years ago, for instance, we had a 1.8% GDP growth. I say, all right, what are you using for your price inflation or price deflator? And they say, well, we had inflation of about 2.2%. I say, well, the reality is more like 8, isn't it? So the lie is 6%. So you got a 6% lie in your GDP calculation. You're calling inflation growth. No, it's not 2% growth. It's -4.
Right.
We got this happening every single year. They call price inflation growth. And if people are looking for, what do you mean by that? All right, suppose you've got a standard measure of $1 trillion for a region. You have 8% inflation, which means that if the economy is exactly the same, and all you've got, I mean in terms of transactions and volume, clients on a net basis, like number of businesses, all that, you got $1 trillion. Well, 8% is $80 billion. You had an $80 billion increase to your economy, and they're calling almost all of that growth. That's not growth. You got to subtract $6 trillion.
Mm-hmm.
And that would mean you've got a 2% growth. Okay, they're calling inflation in the nominal statistics, unadjusted statistics. They're calling all the inflation growth. And they're lying by about 5, 6, 7% every year. Now, the last 2 years have been a little different because the crude oil price came down. And with the lower crude oil price, like cut in half compared to 2015, well, the cost structure went down a little bit because petroleum, it cuts into, feedstock and chemical feedstock and a lot of different things, gasoline expense, and you name it, it's all over the place. Okay, so maybe the inflation in the United States is not 8% anymore. Maybe it's only 6%, but they're calling it 2%. So they're lying still, but lying less. Okay, I really think that we're going to hit a pressure point. I think it's going to come first, not with realization of a flat yield curve. Flat yield curve just means, oh, you guys, we really don't have economic growth here. That's the revelation of the lie. They say, oh, no, we got sluggish economic growth. You're misunderstanding. No, you got a flat yield curve. It means no growth. It means recession.
Mm.
Okay. The second thing that's very important is the TNX, the 10-year Treasury bond yield. I got a forecast. I put it in a public article. I got it in an article just out a couple days ago. I got it in the January report for the hat-trick letter. We've got a double head and shoulders reversal going on. The minor head and shoulders has been completed in the last 4 months. It hit the target of something like 2.4, 2.5%. But now the bigger multi-year reversal is in effect with an upward bias, meaning the neckline and the shoulder line are both tilting upward for the bond yield. Mm-hmm. And we've got targets between 3.4 and 4%. Now, that's your pinprick.
Yeah. If you're saying, so you're saying if bond yields go up, it's over.
It'll put a big, how do you put it? It'll just blow the stock bubble away.
Mm-hmm. Yeah, because that's the biggest. Really, people don't understand.
We
that,
already
Jim.
started to see that this week. We had some $200 down days for parts of the session.
Right.
Mm-hmm.
I expect Wall Street's going to climb on board and put on some very big leveraged S&P future shorts, and they're going to profit from the decline that is inevitable. Mm-hmm. You've got company after company using their profits, and they're borrowing money to buy their own stock. You know, General Electric put out a huge alarm today or yesterday, this week at least. They've got so many evident problems in their financial books right now. I think it's from not investing in their company, investing in their stock in order to, you know, facilitate the departure of Jeffrey Immelt from the CEO room. They're not investing in the company. They got all kinds of debt, and they will not be able to handle higher interest rates. Just imagine $1 trillion of corporate debt across the U.S. landscape that has to be rolled over and put into newly financed corporate bonds. It'll be at a higher rate.
Right.
They don't have much profit. All they got is, you know, these feeder systems to buy their stock.
Correct.
And it's all funny money crap. Now, when this crisis hits, this is my point, back to crypto. When the bond market continues in its upward long-term yield course, it's going to smack the stock market. Mm-hmm. You've got this uninterrupted, what is it, like 4 years without a 10% correction? I mean, it's just ridiculous.
It's ridiculous.
So this is the new era all over again. Yeah, well, like the last 7 new eras, this is going to come apart. And when it does, you're going to see a lot of money flying into Bitcoin and the other cryptos, I think especially into the gaggle of functional tokens. That's where I think the real action is going to be. And the government can't stop it. They're going to come out with these feeble rules to try to interfere, obstruct, and basically try to scare people. Mm-hmm. And they'll be successful to some extent, but you got a lot of smart people from, you know, the old conventional world saying, you know, crypto is going to find its way to zero. Well, I don't think so. I think it's going to suffer these 30% declines that scare the crap out of people. And I told this one guy recently, I said, well, I know down at 10,000, it was 13,000 for the Bitcoin. And, you know, it sounds kind of bad, but get back to me when it's over 50,000.
Right. So I have a question. Whenever you're done with your point.
Go ahead, Nick. Yeah.
No, go ahead. There's a lot of topics here.
So the Bitcoin futures, do you think that, because we saw a sharp and fast rise in the price of Bitcoin prior to the end of the year, and now, you know, up to 20,000, and now as of today we're down below 10,000. Do you think that they are manipulating the price of Bitcoin for the sake of the futures contracts?
Well, let me before I answer, let me put the question back to you. Sure. Can you think of any legitimate reason for having a CME Bitcoin futures contract except to suppress the price?
Nope, and that's my belief. But no, I can't. that's to me why they got into it. So.
Right. I asked a question immediately to a couple colleagues. By the way, I need to qualify a little bit. I've got one colleague who is a very advanced student of what's going on with cryptos. He has accounts. He's had them for years. He's doing well. He can talk your ear off about the technicals. I got another client named London Paul who's quite knowledgeable in this space, and I talk to him once in a while about details. And then there's the voice who's, let me just say, working on things that will become apparent later on. He told me not to talk about any details. I don't even know exactly what he's doing, but he's working on something. All I know is it's asset-backed cryptos. And he has a saying. he says crypto money will do severe damage to cryptocurrencies because cryptocurrencies are just an electronic version of fiat money. Okay, now back to CME. When they came out with their futures contract, I laughed. And I said to my colleagues, can you think of a legitimate reason to do forward hedging on Bitcoin? Is there a great deal of commerce? It just gets silly. Is there can you think of any big billion-dollar projects that need to have forward price hedging due to market fluctuations that are all based in Bitcoin? We couldn't think of a one.
Right.
Right.
So that's my thing.
So what are they hedging? They're not hedging a damn thing.
Right. So the contracts, Jim, are settled in cash, right? They don't even settle them in Bitcoin, in the underlying asset. You can't settle in Bitcoin at the end of that contract.
Well, they're coming up with a leveraged liquidation device. Now let me adapt my answer with mockery a little bit.
Okay.
Can you imagine something in the next 3 to 6 months where the commercial trade settlement would be in cryptos, so the hedging would have a legitimate position and function in near future commerce? For instance, do you think that the Chinese will be buying tar sand oil from Canada and paying in Bitcoin or some other Chinese favored crypto? I can't see that happening. Can you think of a container vessel with Korean electronics or Indian clothing that will be arranged in Bitcoin and will need some forward price hedging? I can't see that either. So what is the CMA doing? I would like to ask the CME, who would be doing hedging and for what commerce? Who are the parties? Otherwise, this is a suppression tool.
So what does London Paul say about these futures? What is his take on it?
He thinks it's for suppression.
Okay.
Yeah.
And my other colleague, who doesn't like his name mentioned much, he goes by the tag name of Sky Crane. He's a funny man. He's a very funny man. He's a very brilliant man. He's actually the most recent addition to the Jackass colleague group. There are 9 of us now.
Okay.
He said, Jim, unless proved otherwise, I can't see that this is anything but Wall Street and Chicago trying to suppress and control the Bitcoin price. I'm still looking for any legitimate hedging from commerce, big commerce. I said, yeah, me too.
Yeah,
me too. I don't see it.
Yeah, there is none, right? So we both know, we all know that futures are used primarily in commerce to kind of hedge yourself in business. If you're actually holding the physical asset, you can go out, buy a futures contract and kind of, hedge yourself from any price fluctuations. But my thing though, Jim, was that, I actually went in detail and looked at these the CME futures. And what I found is that you actually have to have 10x or 5x margin to short it. So currently, I don't think it's being manipulated on the downside, but I do think on the long side, we can see some manipulation. Will those parameters change in the future? They can move the goalposts as they always do.
I have a much more negative view on what you just said in reaction.
Okay.
5x to short it. Does that apply to Wall Street banks, or do they have an exception?
That applies to. I'm assuming. Don't quote me on this. I'm assuming.
I don't assume anything when it comes to the financial markets in the United States. What I assume when I do assume anything is that Wall Street has an exception to commit their crimes.
Yeah, no doubt. All right, people, that was part 1 of the Block Party Podcast, episode number 4 with Dr. Jim Willie, editor of the Hat Trick newsletter. Please stay tuned for part 2. It's coming soon. It's your boy Crypto Blood. I'm out. Holla.
So they hopped in the Lambo and took off fast. Welcome to the Block Party Podcast.